So this is a total honor for me to be here among these superstars of IP of money. And I am very thankful for the organizers to include Japan in this picture. But having said that, I know that I stand in between you and lunch, so I will try to go as quickly as I can. So in response to the organizer's question about the prompt that they have about helper and spoiler and risk generator, my basic response to this is that Japan has long been the helper to the dollar-dominated world, and that's probably not surprising to you. Despite there have been some efforts on the part of Japan to challenge this order, or at least kind of create more international use of yen in the past, as well as some attempts to have a regional currency or regional arrangement, but that has not really panned out. So in some ways, US dollar order has been quite anti-fragile. That would be what I would see. But in addition to that, Japan could be a risk generator in some occasions, and I see some of the elements of that in the context of Abenomics that's going on, and especially the kind of aggressive monetary policy that it's pursuing. So I would like to wrap up with that in answering this question, what kind of role Japan plays in the new financial geopolitics. So outline of this kind of brief presentation, talk about this Japan's role in the currency order, especially in the support of Japan, looking a little bit on the history of the attempt on the part of the Japanese government to engage in yen internationalization, especially in the late 1990s, early 2000s, which basically didn't bear fruit. Then talk about the Japan's position of Renminbi internationalization, and then again wrap up with the looking at Abenomics and how that plays out. Really don't have that much in terms of the slides, but this is the yen-dollar exchange rate. There's nothing more important for Japan for the last 50, 60, 70 years than the yen-dollar exchange rate, I would like to say. Japan has engaged in financial liberalization quite seriously since the 1980s. And there has been with the rise of Japanese economic power, there has been some discussion, some kind of concern about the yen bloc emerging in Asia from the late 1980s and 1990s. But I would like to say that during this period where Japan was really strong, where 7 banks, the largest banks of the world out of 10 were Japanese, Japan was not interested in internationalizing yen. Not only the government, Ministry of Finance, Bank of Japan, concerned about the monetary autonomy in the context, domestic context, were not interested, but financial sector, which has been long been protected, were not engaging in that kind of exercise. It is only after the late 1990s, on the part of Asian financial crisis, which kind of revealed the currency double mismatch was very dangerous for the region, but also the collapse of many of the Japanese financial institutions that lost the kind of clout to oppose the financial liberalization, a massive big ban which came into place in the late 1990s, where Japanese government started to seriously engage in efforts to the internationalization of yen. Obviously, it was too slow, too late. So kind of starting at the position of weakness to internationalize currencies was not the way to go. So within 5 years, it was clear that yen has failed. Yen internationalization has failed. I inserted a table there that Japanese yen use has not grown that much since around that time. Obviously, sources are discussed. Heavy externality that exists in currency is one of them. Financial institutions themselves, even at the time of the weakness, they opposed internationalization of yen because they made a lot of money engaging in the hedging and forwarding exercises. They didn't want to lose that part. And also a lot of exporters were pricing to the market, which is obviously the dollar, resources imports in dollars, and so on and so forth. And when it comes to the regional efforts like Chenmai Initiative, which actually did create a swap arrangement between China, Japan, and Korea in their local currency, which was a one-step advance. But when it comes to Asia currency unit exercise, China, obviously the position of China and reluctance really didn't make anything move beyond that. And also, Japan's, okay. So So then comes the stage of renminbi internationalization. This is a graph that came out from my work with Randy Henning. But most of the Asian currencies has been either pegged to the dollar before the Asian financial crisis, later on kind of shadowing the renminbi. So there has been a kind of increased presence of renminbi. But Japan has not freaked out, to use Dan's technical term, when it comes to renminbi internationalization. And what Japan has done is basically engaging, I would call a benign neglect when it comes to renminbi. Japan did sign on to the direct trade of yen and renminbi in 2011, which came into effect 2012. But there are many indications as to how Japan kind of sabotaged the renminbi, kind of promotion of renminbi nationalization in various ways. First of all, I will raise three here. One, the swap arrangement, which came out with Chenma Initiative in 2002, was expired in September of 2013, and Japan didn't renew it. Obviously, this was at the heel of China engaging 30-plus swap arrangement with Argentina, various countries around the world. So this was one way Japan kind of say, okay, we are not interested. Secondly, Japan has not yet signed up on the renminbi qualified foreign institutional investor RQFII kind of arrangement, which would allow Japanese financial institutions to invest in China and so on and so forth. That's again at the heel of 15 other countries besides Hong Kong and Taiwan engaging in this quite massive arrangement. Thirdly, and everybody knows that Japan didn't sign up to be part of the Asian Infrastructure Investment Bank. Obviously, Japan is one of the few countries with the United States that's not signing up on it. Obviously, it's still early to know if this is really connected to renminbi internationalization effort, but there's some talk about that to be part of this, and Japan not being part of it is quite a big deal, despite of the fact that China really courted Japan to be engaged in it. So why didn't Japan do these, why do Japan engage in this benign neglect? One, Japanese financial sector is not interested in China businesses. There has been obviously kind of precarious political situation, so on, that everybody talks about, but actually from the financial institutions standpoint, they had a very bad experience in 1999 to 2000 when they were starting to engage in investing and engaging in a financial investment in China, where they had to write off a majority of the investment that they had in some of these trust banks. So that's one experience. Secondly, and kind of coming back to my early point, that Japanese own experience of trying to engage in internationalization of yen, where government did everything they needed, but market didn't follow. So I think that's Jonathan's point about how this is a kind of very difficult issue area where government can do so much. It's the market that really have to follow. And so that's the kind of basic point. Finally, let me go to Abenomics in 1 minute. Three minutes. Obviously, 3 arrows of Abenomics that's been repeated many times, which came into effect in 2012, December, when Abe became the prime minister after DPJ, the Democratic Party of Japan, was defeated by LDP. Only 3 years of reign that DPJ had, and LDP came back. And Japan engaged in a massive domestic stimulus growth kind of strategy. And this partly came from the fact that Japan had a very horrible experience at the time of global financial crisis, only a few years earlier, where carry trade, which was used, Japanese yen and low interest rate to invest in somewhere else, that reversed. And also the relatively slow monetary easing on the part of BOJ really created a major appreciation of yen, and Japanese economy contracted much more than some of the economies which are directly hit, like the US and Europe. So in response to that, Japan engaged in massive monetary easing as Abe came into the office. Actually, it was Kuroda who became the governor of Bank of Japan in April of 2013, that had this QQE, that qualitative and quantitative easing, which boosted Japanese Bank of Japan's asset, buying up most of the JGB, not directly, but still, and kind of boosted the Japanese economy through depreciation of yen, as well as the kind of boom in the Nikkei stock index. So In this context, I would like to note that the foreign investment profile within Japan has boomed. Not only that started gradually in the 2000s, again in the aftermath of financial big bang and so on and so forth. But under Abe, the short-term JGB, the government bond, the Japanese government bonds, short-term government bonds is now almost half of them are held by foreigners. Japan has always been kind of capitalizing on the fact that Japan is not going to be the next Greece, even though it has 250% of GDP as its public debt. They say because most of it is held by Japanese. It's true for the long-term debt. It's still 90% of the Japanese long-term debt is held by Japanese. Most of it, almost half of it, by the Bank of Japan itself. But now about half of the short-term ones are held by foreigners. So many of these, and also on the other hand, the depreciation yen is welcomed by the foreign Japanese firms. Now, how the Japanese kind of financial balance is structured is that domestic household savings are going down and down. It's the old generation, kind of old age problem and so on and so forth. It's closer to the U.S. or maybe even lower than that. What has and obviously government is totally in debt. Well, what has the surplus is the firms. But most of the firms are now invested outside of Japan, where a strong dollar is great for Japan because the profit and all the kind of accounting makes Japanese firms much richer in that sense. So altogether, so that kind of creates the boom, like a pseudo boom in Japan, but now it's creating much more vulnerability, which can kind of make Japan into something of a risk generator. Even though I would kind of conclude with saying that Japan has always been a helper to the dollar regime. It's been so even in the face of renminbi internationalization, while now Japan is much more vulnerable and it might, given the kind of domestic mandate for more growth, it might create more risk than it's actually, it has in the past. So I will stop here. Thank you.
So let's open it up. Go ahead.
I wanted to ask a question of Hongying, and it's around KIPS, whatever pronunciation, because the whole imposition of sanctions by the U.S. and it's waking up to that aspect of key currency power seemed to be quite a significant moment. I mean, not least for IP, we can stop talking about Suez and Cuba and Panama and have a new, really significant monetary statecraft action. But it seems also potentially a point at which the limits of exploiting key currency status get manifested in China saying we need to do something about this. So. We can just dismiss it in the way Dan did as not being used very much, etc. But how important in China is that initiative? Is it just the radicals winning for once, or is it really an important initiative pushing back at the risk potentially from sanction? Does it fit in also with pricing of commodities in renminbi? Is it is this really something significant from a Chinese perspective that we need to bring into the dollar and key currency question?
I think from even the moderates' point of view, ultimately, when China's overall national power increases to a level comparable to the U.S., the currency status of China will, will rise to a point of being comparable to the dollar. So I think what is different about the radicals and the moderates is not the ultimate goal. It's the it's the horizon. So even from a moderate's point of view, this is all good to avoid having to rely on the clearing mechanism based elsewhere, which could be used for geopolitical reasons, whether it's sanctions or spying. The Chinese, I think, policy circles are united in recognizing the geopolitical advantage of having its own system versus being totally reliant on the U.S.-based system. So there is no I don't think there's any fundamental difference there. It's just how fast you move toward that status and how what price to pay in the short run. That's what differs the moderates from the radicals. Dan?
Also a question for Hongying, which is, I enjoyed your presentation. The thing I keep wondering about is two things. First, there seems to be a parallel between your argument about how China views RMB internationalization and Kate's work on the euro and the idea of we're going to create a euro based on sort of political norms more so than economic ones. And of course, the problem with the euro is that it then ran aground once it actually confronted economic realities. What I'm curious about is that is there going to be a point where China runs into this same issue? Or did China actually already run into this issue in the sense of when the Renminbi got included in the SDR, things have not gone well for China's finances since that move. Now, I don't think that move is actually correlated, or I don't think that move is the cause of it. But in some ways, I'm wondering whether that's strengthened the sort of moderate hand that you're talking about, arguing again, and I agree with you, it's not a question of what they want, it's a question of timing and sequence, but it does strengthen the moderate argument of we still want to bide our time for a little bit longer.
Mm-hmm. Yeah, I think definitely, since the SDR entry, China has imposed more capital control, everything moved as kind of a backward. But I think it does strengthen the hands of those that are on the moderate side who would say, yes, we all agree that ultimately this has to change, but we need to think about the short-term consequences for our economy. All these years we've been successful because our participation in globalization has been well managed. And if something radically changes, that would just bring chaos, and the long-run goal of catching up with the U.S. in comprehensive national power will be undermined. So I think they always recognize the economic reality and pace their reform accordingly. Jonathan.
Also a question for Hongying, I'm sorry. And like that, I always learn from your presentations and appreciate them, but I want you to convince me of something. I wonder if the CG crowd hasn't spiked the Canadian Kool-Aid you've been drinking up there in Canada and made you believe that this SDR thing is somehow independently consequential. I'm curious as to whether it's not simply a technique that China can use to kind of undermine the dollar's position without seeming to undermine the dollar's position, and that it's entirely instrumental, and that the SDR in and of itself has an independent kind of weight or meaning.
That's what I thought. Actually, I wrote a paper for CG that this is much ado about nothing. That was my title, actually. But since then, I have learned that SDR status actually has a real impact. So according to the IMF, I think they're actually going to, whether the RMB is in the basket makes a difference in countries' willingness to hold RMB in their reserves, because if they do, if now that RMB is in the basket, IMF would count that as foreign reserves holding. So, I used to think, you could be in the basket, but it's highly symbolic. I've talked to people, for example, in the Canadian Central Bank, and they said, we're not going to change our composition just because it's an SDR. But then I realized by talking to people at the IMF, actually it is going to have a real impact. So the first data with a separate identification of RMB-denominated reserves holdings will be published at the end of March 2017, and it will give countries added incentive that they would qualify for some things they wouldn't qualify before. So I don't think it's as irrelevant as one might think.
Question about Japan, really. I think Japan's choices in the 1980s and early 1990s are absolutely fascinating because it had an opportunity.
Speak up a bit.
I think that Japan's choices in the late 80s, early 90s are absolutely fascinating. This was a fantastically successful economy. And by the way, remember, despite all its problems, its GDP per capita growth has been absolutely fine over the last 10 to 15 years. Prosperity in Soviet Tokyo and surrounding Tokyo has risen at least as well as here or in northwestern Europe. But at that moment, you had all of that and kind of dynamic real economy, and as you said, the banking system was kind of conquering the world. I was involved in negotiations. We'll let one into us if you'll please let one into you, which hasn't happened with China at all. And yet your leadership didn't push for more. Was that deep down because you accepted the international order as it was? That actually you thought that over a quarter of a century or a half a century, Japanese interests were in being, as it then seemed, the most dynamic economy in the world, within an unchanged order, on the one hand, kind of restraint from super strength, or on the other hand, the timidity which one could kind of wonders about with Germany as well, which is given the middle of the 20th century, no, let's just get on with being good at business and economics and building up our citizens' place in the world. So as I say, I'm repeating myself, but I think your choice I think is one of the 2 or 3 most interesting things in the international economic sphere in the last 50 years, actually.
Yeah, and China is learning a lot from that too.
No, they're all studying it. They
yes.
study it very, very carefully.
Oh yeah, in some ways as a
You both
mistake.
know, more than they study us.
Right. Yeah. So I think it's I think it's a fascinating issue, even though this wasn't part of a major part of what I did. But I think the Japanese overall attitude is, given the globalization, given the kind of U.S.'s American kind of America taking care of this whole global order, Japan would like to take advantage of it, but also keep Japan stable by not engaging in the same globalized open way as others were doing, or even the Europeans. So in some way, maybe Germany a little bit less so, but so in some ways, and also domestic politics was in such a way that there was no push to do that, right? The push to kind of open up and be a global caretaker and be, kind of bear the burden in a way that would really have a lot of domestic impact. What Japan did was to kind of pay basically to the maintenance of that global economic order, through foreign aid or capital recycling plan. And Japan could do that because Japan had a lot of surplus, right, trade surplus. So in the way that you used was like it was a 2 birds in 1 stone kind of thing, where Japan could use the dollar that's in their coffers for a lot of Latin American debt crisis to everything else. And also that will have some effect in kind of creating yen slightly weaker than it would have otherwise been. So all that was a great way to deal with the global situation, and Japan didn't feel the need. Once they were in a weaker position, they felt like yen internationalization would create more insulation rather than Japan inserting into the global sphere. So I think the initiative in the 1990s, late 1990s, let alone the kind of the domestic politics, but it's much more to do with how Japan could create Asia more for them rather than the kind of being at the mercy of the dollar dominance. So I think it's a really interesting story there, and China is learning a lot from that, I'm sure.
One question, and then, Hongying, did you want to respond on this point of what
China's
China's learning
Oh, yeah.
before we go to a different topic?
Actually, I have one question to Hongying, if I can.
We'll come to you.
Okay, so one question I have on China is, so I understand China's renminbi internationalization comes from this kind of urge for prestige. And obviously, general public buys into it, right?
Yeah.
So is that being used by technocrats and reformers? Say, okay, so renminbi internationalization requires a lot of technical liberalization and all the reform, which would have some negative impact on general population in some ways. Is this a kind of clever tool on the part of leadership to use this prestige desire to reform, or is it not as well connected as I think it is?
I think within the PBOC, it's very clear. This is a leverage. How do they get the leaders to agree to the very difficult financial reforms that they would like to see, but many other bureaucracies and sectors would not like to see? This is one thing that would persuade the leaders very easily. Look, This is about our national power, national prestige, and I think top leaders are very susceptible to that kind of an argument. It's, oh yeah, let's do it. Let's do it with full force. And so that allowed the reformers within the PBOC to overcome some of the very difficult obstacles of financial reform. So definitely, yeah. Oh, on learning? Do you want me to talk about learning? Oh, just, yeah, so the learning part, exactly. The Chinese have talked about the Plaza Accord more than anything else in terms of how China should respond to pressure on the exchange rate issue. And they said, we don't want to lose 20 years as Japan has. And so Japan clearly sets an example of what not to do for us. And on the issue of specifically currency, I think the specialists are looking at how Japan managed to export yen liquidity, and they look at the Chinese case and they're thinking, this is not a good way. So they're still trying to figure out what to do, but they have learned what not to do from Japan's case.
Last question.
I just have a short question for Katada. So Abe was the first leader to schmooze up to Trump, really, right? And I think that's a deliberate strategy on part of the cabinet office in Tokyo, and I think it's going to be very interesting to see how that pans out over the next 4 years. How do you think that could affect the dynamic that you described?
How does it
How do you think that relationship would affect the dynamic that you described?
So I think Abe's courtship to Trump is making it easier for Japan to do what it needs to do for domestic purposes. Japan, Trump was actually criticizing Japan as a currency manipulator too. And, TPP was, Japan wanted TPP and all that kind of stuff. But now Japan kind of, shifted as according to the U.S. Election. And I think geostrategically, that's what Japan felt that it needed to do. And now the focus is more on bigger things. I think Japan can still get away with this aggressive easing, and even at the time when Fed is tightening and so on. But it will create kind of continuous problem because yen will still be weak and dollar and all that. So yeah, I think Abe is as a short term clever, kind of manipulating, taking advantage of the situation, while in the long term maybe Japan has to pay dearly for this. I'm worried about that.
Mark had to go upstairs and do a BBC interview, of course, because he's an academic but also a public scholar of some renown. So he left me in charge. One closing comment for the morning. It's been unbelievably fascinating. I am amazed that we haven't talked about the threat of competitive devaluation. So maybe that means that everything's going to be fine because all these smart people are in the room and nobody seems worried about that. So I'm wondering whether that'll come up this afternoon at all. It's not actually raised in the papers, but it is something in the back of my mind. Lunch is on the 3rd floor, and as we promised, we have deprived you of half of the time we gave you for lunch in the schedule. We need to be back here, at 1:45 sharp for the 4th panel. So thanks for a great morning, everybody.